Hello traders, it's Theo Nagpan here, founder of Master the Markets Elite Trades Conference and the Traders Open Day. So right now we have the Euro dollar and the dollar Swiss position over here. As you can see, we are just up, just a little bit more than 2,500 pounds up, okay, 2,731. Now, as I've always mentioned, and I'll stress one more time, that whatever that you're seeing over here is not yours yet. It's unrealized. It's unrealized profits until you close the trade and you bank in the cash. Okay, but of course there are strategic points to cash in the cash, because if you do not do that, then cumulatively, this is the most important word for professional traders, cumulatively your positive equity curve won't be able to sustain itself when it goes through the drawdown. So one of the things that we must review and constantly analyze is where is the target point that we are going to be taking our profit. Okay, you must always constantly check that, because sometimes when the market changes or its momentum reduces, you may have to readjust your target. Okay, and that has got to be done out of statistical studies. Okay, let me give you some two tips what you can look into in terms of target analysis. The first thing is what we call the cycle depth. Okay, is what we call the cycle depth. Okay, let me show you this. Right, so what you actually need, let me just bring up a chart over here. So let's see on the euro dollar here, right? What you actually need to measure cycle depth, as you can see, you need first the cycles, right? The cycles, you can see over here, the cycles here. But most important thing out of cycle measurement, so that your cycle depth is constantly measured, is that you must need, traders, your quantified swing high and lows. This is why at Master the Markets we have the smart money indicator, which is purely based on price, not a price derivative based indicator like what 98% of indicators are, but it's purely based on raw price data. That's how it gets this swing high, swing low. So that must be quantified. Rule number one, right? So for measuring cycle depth, you must first quantify your swing highs, your swings, okay, your swing high and swing lows. Must quantify them. So critical. Okay, right. Now the next thing that you need to measure then, in the cycle depth, in an uptrend like this, higher highs, higher lows, measure it from the high to the low. Okay, that's your cycle depth basically. Yeah. So if I were to measure that, let me erase that away. If I were to measure that in this cycle depth over here, it's 384 pips. This cycle depth over here is 438 pips. What you then do is then research the cycle depth. I'm talking about target analysis here. Research this cycle depth over like maybe 20-30 cycles, and research it over 6-8 currencies, or even different instruments, Dow Jones, gold, whatever it is. So research that, and then after you have got that in terms of pips, and then you make it adaptive and relative to ATR. Okay, to ATR. So that's critical in terms of cycle depth. Now the second thing that you can then look into in terms of target review and analysis is definitely the last swings. A lot of orders are placed here in the last swing highs and swing lows. So that is one place that you can look to take your profit as well. If you want to scale out, you can do that as well. Or if you can look in the cycle depth, you can look at that as well. Okay, the last swing highs and lows. And finally, the third one, you can also look into FIB extensions as well, because those are also critical, basically profit points where traders will take their profits. So for example, if I were to do, let's say, okay, let's do this. So I'm taking that as 100%. So 123 is over here, 138 is here. So you have to do your stats based research studies. Where does price usually go to? Is it 123.6%? Is it 138.2? And then you need to measure them and compare them to the tree based target levels that I just mentioned to you. And then you got to choose the best one out of that tree. So just to recap, the first one is cycle depth. The second one is basically what I just mentioned, is swing highs and swing lows, right? And the third one is basically your FIB extensions. All right, so definitely do look into this. in terms of your target analysis. All right. So as of now, in terms of the positions, we're up just a little bit less than shy than 3,000 pounds at the moment. Okay, this is a smart money strategy. As you can see in this, basically in this trade, we have entered on the close of this trade. In terms of dollar Swiss, we really entered up really high above the level where it all started off the move over here. The reason is because it's all based on price traders. That's why we can get in so early, and it's all just in real time and real transparency, because over here we really pledge ourselves in establishing the truth in this industry. Okay, that is what we're here for. That's our mission statement. No hypes, no like crazy kind of performance showing you that, I can make 50%, 100%. No. If it's a loss, I'll show you it's a loss. I'll take a loss, no excuses. If it's a win, and if it's a really good win and it's a good run, I'll show you that as well. Because the reason why we are this confident is because of the stats and the research that we have done on price. Okay, there's very few people out there except the institutional quants who study price to this level of detail. Okay, that's why we're able to get in so really high up very fast before the move starts to kick in. No price derivatives, just raw price alone. Okay, I guess that's pretty much that me in this video. I believe that was good content for you all to reflect on in terms of target based analysis on those 3 points that I told you. As we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.